Ladies, if you have always wanted to understand what people are talking about when they say things like stock market, stock price, market index, investing, and many more, then this is the video for you. A study by Boring Money found that in the UK, there are over 50% more male investors than female investors, and that gap only gets wider every single year. Of people aged 18 to 34, only 20% of women invest versus 41% of men in the UK. That gap, in my opinion, is due to a lack of knowledge, which creates a hesitation for women to start investing because women are more likely to want to properly understand the topic before putting their hard-earned money into something, and men, on average, take more risks. Well, ladies, we don't have to lose this one to them anymore. Starting right now, you can begin to understand everything well enough to invest in the stock market and make your own money. And I promise that by the end of this video, you will understand all of these terms and more in a way that no one has ever explained it to you before. The first time I walked into the lecture room for my finance degree and they started talking about the stock market, they used so many big words and terminology that I had never heard of before that I left that class feeling completely overwhelmed and none the wiser as to what the stock market actually was or what any of those words meant. It was only when I started applying these words in my job and to my own money and investing journey that the penny really dropped for me. So today, I'm going to break this down in a way that if you have never learned what these terms are before, that you will be confident enough to hold a basic conversation about the stock market and investing and hopefully start investing yourself. Class is now in session. Let's start with the two words that this is made up of, stock and market. Now, imagine that there is a company worth £1 million, but instead of one person owning that whole company, what they do is divide up that company into a million tiny pieces that are worth £1 each. Each of these pieces would be called a stock or a share, and those words literally mean exactly the same thing. So don't let anyone make you feel silly for not knowing the difference because there isn't one. A stock or a share is simply a tiny slice of ownership in a real company. So now instead of the company owner, let's call her Jessica, owning 1 million stocks of the company, Jessica wants to raise some cash, so she decides to sell 500,000 of these stocks on the stock exchange. You can think of the stock exchange like a huge department store that has all of the different brands for sale in it. So there's one floor for beauty, one for clothes, one for homewares, one for designer bags. And all day, every day, people are buying thousands of items that the companies are selling via the department store. So once you buy that handbag, you now own a tiny piece of that brand. There are different stock exchanges in different countries and for different things. So imagine the London Stock Exchange is a store selling lots of UK brands. The New York Stock Exchange sells all the American brands. So you might wonder, how is the price of a stock actually worked out? Why do some stocks cost £12 and others cost £450? Think about the handbag that you bought in the department store. Let's say it's a designer bag. The actual leather and stitching on the bag probably cost the brand about 30 quid to make. And you're not paying 30 quid for it, are you? You're paying £2,000. And the reason is the brand, the demand, fashion trends, the wait list, the story, everyone wanting the exact same thing at the same time. A stock price works in almost exactly the same way. The stock price goes up when more people want a piece of that company. Maybe they just launched something that everyone's obsessed with, so they're making lots of money. And when it goes down, people lose confidence or the hype dies off, or a competitor brings out something better. So the price was never really about what the company is worth on paper. It's about what people are willing to pay for its future. Exactly like that bag, you're not paying for the leather. You're paying for what everyone believes that brand represents right now. But here's the thing, you can't just wander into Selfridges and start grabbing things for free. You need a way to pay for things. And that's exactly what a platform or brokerage is. Think about your account with ASOS or Net-a-Porter. You can't actually buy anything from their site without making an account first and linking your card. And a brokerage is the same idea, but for the stock market. It's the app or the website that actually lets you place the order. So when someone says, I use Trading 212 or I've got a Vanguard account, they're just telling you which app they downloaded to get into the store. The platform itself, it's just like the doorman opening the doors of the department store building for you. When you buy something in a store, it has a barcode on the tag, and that is a great analogy for what a ticker is. A ticker for a stock is the 3 or 4 letters that are a unique code for that stock. For example, AAPL is the ticker for the stocks of the company Apple, and no other company has that code. So when they scan the barcode at the till, or in this case, the ticker, they know exact price that they can sell you the product and exactly what the product is, as well as how many they have in stock. So now you're actually standing inside the department store with literally thousands of brands to choose from. It can feel completely overwhelming. Genuinely, where do you even start? And that's the exact problem that an index solves. An index is basically like a curated edit. Think about when a magazine puts together their best dress list of the year. They're tracking a specific group that represents something bigger. An index does the same thing, but with companies. The FTSE 100, for example, is simply a tracked list of the 100 biggest companies on the UK stock market. The S&P 500 is the same thing, but for the 500 biggest companies in America. So when you hear on the news that the market had a good day or the market had a bad day, they mean that this curated list of companies on average moved up or down in total value. The index is one single number that tells you the overall mood of the room without you having to check every single company yourself. Now imagine you don't want to spend your evenings researching individual companies trying to work out which ones are going to do well. That's completely fair. Most people don't want to. And this is where a fund comes in. A fund is like hiring a personal stylist, but for your money. So instead of walking around the department store and picking every single item yourself, having to try them on, see if they look good, see if they go together, you're paying someone else, in this case a fund manager, to do the choosing for you. The fund manager has their own curated selection of all the brands in a specific category or from a specific country or region that they think will do well, and they choose them on your behalf. So by buying into their fund, you are trusting that they have done a good edit, chosen the best companies for you to buy in the right proportions, the same way that you would trust a stylist to put together a look that you'd never have picked for yourself that actually works for you. So putting these two words together, we get to an index fund. In this case, think of it as the best dressed list, and the stylist hasn't made their own edit of it. They just give you everything on the list because this isn't a service that the stylist or fund manager has actively chosen themselves or had to take lots of time to research. It's a cheaper way for you to buy everything on the list and still look good. It's just not a bespoke service now. So let's say you want to cut out the stylist altogether and just buy the best dressed edit yourself to save some money. This is where an ETF comes in. ETF stands for Exchange Traded Fund. And when you buy a share in an ETF, that share has a tiny slice of all the companies in that index. So for example, an ETF of the S&P 500 index has a tiny sliver of all 500 companies in that index in proportion to what percentage of that index they make up. It's kind of like buying a package holiday online. Everything's already been pre-selected for you and bundled together. So you just click add to basket. It's super cheap and convenient. You've got your flights, your hotel, maybe the all-inclusive buffet, but you didn't really choose any of them yourself. As opposed to a luxury holiday that you need to go into the travel agent to choose the specific flights and hotel that you want. That's kind of like what a managed fund is. You're paying extra for a more bespoke service. In both cases, you get the holiday to the same destination, but the selection of the elements in it is what determines the final price that you'll pay. While we're on the holiday vibe, don't you get a rush from buying your favorite brands cheaper at duty-free at the airport? Well, that is what an ISA is like. ISA stands for Individual Savings Account and is a UK product that lets you buy funds and individual stocks and keep any profits that you make completely tax-free. There are also cash ISAs, which are also tax-free, but it's like having a savings account. You deposit your cash and you don't buy any stocks, but you can earn tax-free interest on that money. If you buy stocks outside of an ISA and make money on them, the government will tax you on your profits. But if you buy them inside an ISA, and you can buy up to £20,000 worth a year, they can't tax your profits. Think of the ISA as the shopping bag where you can buy up to 20k of products in, walk out of the store without the government checking your bag. You might sometimes hear this referred to as a tax-free wrapper. And lastly, in today's class, that brings us to the word investing. I know I've used this word in the video and talked about investing, but now that you know what everything else is, this is going to make so much more sense to you. Investing is when you put your money into something with the expectation that it's going to go up in value and be worth more in the future. So you end up with more money than you had before. If you walk into the department store but keep your cash in your wallet and leave with nothing, you still have your cash, but you haven't added any value. In our fashion example, that value would be how great you look with your new outfit on, how many compliments you get, for example. But in real terms, the value that you get from investing is having more money after a certain time period than you did when you started. Now imagine next week you walk into the store with the same amount of cash in your wallet, but they've put the prices of everything up. The lipstick that you were going to buy for £15 is now £18. Now the same amount of money is going to buy you less lipsticks than what it would have done last week. That is called inflation. So instead of letting the value of your cash go down, it would be better to buy something that will hold the value or go up. And that, in a nutshell, is what investing is. Let's talk about this in terms of Birkin bags. They are wildly expensive because they're limited, but also because they hold or even go up in value, which is why many people refer to them as an asset. An asset just means something that you buy that holds its value. So when you think about it that way, everything that we've talked about today, the stock, the fund, the ETF, your ISA, all of it is simply you building your own collection of assets, things that are actually working to hold or grow in value while your money's invested. So that's the real difference between a Birkin and the kind of asset we're actually talking about today. You don't need a 5-year waitlist or a friend who knows someone at the boutique to get you access to these. Anyone can start building a collection of assets like this with just £10, £50. It genuinely doesn't matter how much money you start with. What matters is that you start. And now that you know what all this terminology means, I hope you'll feel more confident to start your investing journey or have a conversation with someone about the stock market and feel like you understand. Class is dismissed, but I am giving you some homework. After this video, go to the App Store and download an investing app. Connect your bank account and open a stocks and shares ISA. Deposit just £10, and that could be the beautiful start of your investing journey. I've linked an investment platform that I use in the description box below if you want to get started. It's completely free. Thank you so much for watching. Please join me again next week for more life-changing education to help you get on top of your finances. Ciao for now.